All right, so before I begin, I just would like to know a little bit about the type of traders that we have here in the room. If you're swing traders, futures traders, if you're familiar with the E-mini S&P or NASDAQ markets, if you have any experience, or if you're just brand new. That way I know how slow to take this webinar, take this class, or if everyone's here has more experience, then I can skip the easy basic things. I can go right into the methods, and that way we can take the class at a good pace, right? It won't bore everybody who's more experienced. Let me know. So I have here the NASDAQ market and the NASDAQ, the E-mini S&P, as well as the Russell, the Dow. They're all financials, U.S. financial equities that move up and down together. All right, Joel, years of trading. Okay, thanks, Sam. So what we have coming up here is, I think, a great opportunity to be buyers in the market. And thank you, Tasha. And so what we have is looking at an opportunity at the moment to be buyers. And I'm going to explain to you why. There's something that I do every year. I've probably put out maybe two or three videos this year on understanding what's called the January effect. And the January effect works on the NASDAQ or the Dow or the E-mini S&P. It's universal when it comes to the financials. And to give you a little bit of a starter on this, if you haven't watched the videos that I have out there, is we're looking at what happens every single year beginning in January. Okay, I'm going to add here a line that starts us off at the beginning of January, right over here. And so this idea that the market predicts where it wants to go towards the end of the year is very powerful. It's actually very strong as forecasting an opportunity to be a buyer. But we can't just buy and hold because these moves are huge, right? We can lose a lot of money. So what I want to do is first, the way this method works is outlining whether or not January, the month of January, whether it be this year or the upcoming year, 2021, which you could use as well, whether or not January was an up month. So from January 2nd to January 28th, right over here, last day in January, what we have is an up month. Okay, so from here to here, we have January that opened and January that closed. All right, so the month of January was an up month, and it's the same for most financials. And what this tells me is that moving forward into the future, if you just bought the market here at the end of December, the end of the year, 2020, you should be up. This is roughly 90% accurate. It's very good. It's going back towards the beginning of the stock market, so that's why we didn't have the NASDAQ back then, but we have the stock market and then the Dow, the E-mini, the NASDAQ, the Russell. They all work the same way. Now, there's two ways that you could play this move. You could buy it as soon as it breaks, because typically there's a pop as soon as it breaks the high. And if you look at what happened as soon as the market broke the highs of January, it popped. And so I always recommend not entering right as the market hits that high. We want to see some evidence or proof that it breaks through it, just like I do with the Atlas line. I like to see two candles close above or below the Atlas line for some proof. In other methods as well, I use that same idea. But in this case, a couple of points above would be the opportunity to be a buyer. So don't put your buy as soon as it breaks the high. Put it a few points above, and usually there's a pop. So you have a specific entry that you're waiting for. Now, the target should be, if you look down here, the ATR. Most of the videos that I do on the DayTradeToWin blog or in the videos page of DayTradeToWin or the YouTube channel, I always talk about this ATR. And so it's universal. I have a setting of 4. It doesn't matter if it's 4 for a 5-minute chart or 4 for a 1-minute chart or 4 for a daily chart. It's 4 days. This tells me that moving forward in time, I can expect 214 points on the NASDAQ, at least, that the market will give me. And then you can trail a stop, and you can add positions, you can take off positions, but that's all after the fact. We need to have the market make at least 214 points before thinking about that. Or just take the 200 points and run and go home and go on vacation. So if you look at, and if I add here a ruler to about 214 points, somewhere about there, I can probably tell you market was hit within the next 4 days. It doesn't have to be 4 days, but it was hit in the next 4 days, which makes sense. And at this point, you're playing with the house's money, right? You can trail a stop. Now, this is typical. The market will pop when it breaks the highs, especially and only when you have a January effect. Sam says here, how do you calculate the 214 points? Sam, if you look down at this yellow graph here on the bottom, I'm using an indicator called the ATR, the average true range. And most platforms have this. I'm using NinjaTrader. If I right click on the chart and I choose indicators and I come here to the ATR right over here, you can see that the ATR value right over here, ATR, has a setting of 4. Typically, it's defaulted to the setting of 14 on TradeStation and on NinjaTrader and other charting platforms. Just change that to 4. And once you change that to 4, remember to come here to Template, save it, and save as default. And that way, the next time you bring up this ATR indicator, it will remember that you're using a setting of 4. Now, what the ATR does is it calculates the last 4 candles, averages out high to low, and gives you a value what you can expect the market to move within the next 4 candles. So I'm not looking at, Sam, the last 20 days or 30 days. I'm just looking at the last 4 candles to predict what's going to occur in distance and price movement within the next 4 days. And that's how I got 214. The scale down here said, well, the last 4 candles, 1, 2, 3, 4, last 4 candles, on average, from high to low, are moving 214 points. I can expect 214 points as well, moving forward in time. All right, you got it, Sam. So that's how that works. And I use the ATR with everything, actually. In this example, it's the NASDAQ on a daily chart, but for any type of trading that I do, I never want to be going blind into the expectation what the market will be able to give me. And on top of that, I use that as a stop as well. Not exactly 1-to-1 ratio. I have to give it a little bit more room, but I do use the ATR to help me understand the type of stop. Because if the market is more volatile and faster and stronger, the ATR will be higher, and it tells me I have to either stay out of the market, or I have to use a larger stop, or I have to use a larger target. But if the market's slow, it's also relative. I have to use a smaller stop, a smaller target, because the market's a little bit slower and weaker. So it's a great tool to use. I'm a price action trader. I don't like to look at moving averages or MACD or stochastics or any of that stuff. I never use that on any of my charts. If you ever watch the hundreds of videos that I have out there, this is probably the only indicator that I use besides my proprietary indicators created. So now the market went up, and you can see that it continued up. But now the market hit a peak and started to go down. This is also very good. Yeah, absolutely, James. We can look at the scalping on the NQ. So what we are going to look at is this opportunity to be a buyer when the market returns and comes back. Now, I don't know when that's going to happen, and I'm not going to buy it here or here or here, because I just don't know when the market's going to return and come back. So the way that I like to teach this is I like to look at least 4 or 5 candles that are retracing or pulling back to help me understand that the market's returning or coming back to a certain point. So this is here 4 or 5 candles beginning to turn around. And once this happens, what I like to do is place a 50% marker to help me understand if it's going to turn around and come back, because my goal essentially is to be a buyer. And I'm not going to be a buyer until the market breaks this 50% marker by a few points, maybe a closing day. But definitely I want to see the market begin to do this before becoming a buyer, because we can go down for a very long time. And the same thing is true until that happens. As far as this method, the January effect, is concerned, I'm not going to be a buyer until I see that. And now it begins to occur right here, right over here. So when I look at this candle closing above and this candle closing above, it begins to give me a little bit more confidence, and there's evidence here that we're now heading back to test the highs. And really the goal here is not just to take a long entry once it breaks the highs, but leading up to the highs and getting in as it reaches it. So markets love to test where they've been. I say that all the time. So it's a good idea to now become a buyer. And you can see that the market not only made the ATR, which is here at about 325 points, big number, right? Actually, it happened sooner, right? Remember, the sooner it happens, the better, right? We don't want to see the market flip-flop. And so within the next 4 or 5 bars, it hit that 300 points very easily. And it kept on going. Now, these are huge numbers, and I don't expect anyone to be holding on to these. If you're trailing a stop, it's a different story, but I don't expect anyone to expect 1,000 points. What I do expect, though, is at least that you take a look at what can be achieved, right? Let's be realistic, right? I'm not going to sit here and say, you should take 1,000 points. Just look at with the ATR, and it's a good expectation of what could happen. So this is 300 points. Figure 300 points is what could be achieved before beginning to trail a stop, okay? And that's how that works. And so this happened on this green candle right here. But the next 4 or 5 bars, you should have that. And the market hit the high, which is the ultimate goal, right? That's really the ultimate goal. And once this happens, if you want to now become a buyer once again, if you aren't already long, remember there's typically a pop that occurs. In this case, it's 190 points. And from here to here, market went 330. So again, the ATR indicated a good understanding of what could be achieved. 190, and it went 330. So not too bad. Now I look for, again, a good retracement, a good pullback. I would have to say 4 or 5 candles. And like I said, this here doesn't really tell me there's a good retracement. Maybe this here as well. I was looking at this with James that I'm working with. And I don't usually look at the NASDAQ all the time. I look at the E-mini more so, but a lot of people like the NASDAQ, so I figured I'd start focusing on it as well. And this here, 1, 2, 3, 4, this is a good little pullback or retracement. If you want to use that, this actually looks like this. And then once again, the market, once it hit the 50% mark and broke it, the goal is to take it back up. And then there's another pop that occurs once it breaks the high. Just like this, breaks the high. Just like this when it broke the high. So every opportunity that you have to be a buyer on this type of a day, the January effect, is very strong. And the same thing now, where we're at the moment, is why I'm showing this to you, is because I believe that there's now an opportunity, a very strong opportunity, that the market will test and reach this high, whether it's the E-mini or the NASDAQ. We can do it on the E-mini as well. It's probably the same exact move that you're seeing. But as far as the opportunity, it exists now and exists today to be a buyer and to look forward to at least 250 points if you're looking at the NASDAQ. Remember, it depends on the market that you're looking at. E-mini is different. And when it starts to make this 250 points and continues, you can trail a stop and you could lead up to the high, the test of the high. And then once it breaks that high, I expect another pop as well. Now, I don't know if it's going to happen today or tomorrow or December 1st, for example, but I do know the elections are a big deal, and staying or keeping politics out of the conversation. We're just looking at the price and what it's doing as the example exists. Any questions? James, Sam, Joel, Steve, Tasia, Natish, Eric. Yep, no problem, Eric. All right, so that is something, food for thought for those of you who are asking yourselves, should I be a buyer and why? You have the opportunity right now. Now, as a day trader, you can look for the stronger opportunities to be a buyer because we're above now this area, and I think that any day that is an up day is just going to lead you to that. We're going to see some very strong up days. So to go to scalping now, right? If I remove here everything off the chart. By the way, before I remove this, anyone have any questions on this? And before I do that, let me show you the E-mini as well. So on the E-mini S&P, remove some of these things here. On the E-mini S&P, what we're going to do is do exactly what I just did on the NASDAQ, and the results should be very similar. Here is the market retracing, and here is the market breaking the 50% marker here. Then we had the market come back. Then we market came back up. Second day, third day. So this on the E-mini S&P has already begun. On the NASDAQ, it's starting today. If we stay where we are right now, positive territory. But on the E-mini S&P, you can see that it's on its way. And if you ask yourself what I can expect, there's a 67 points or 60 points, 65 points. Even if you take 20 points, I think that's still a great opportunity for anyone. And once it hits this, look for it to pop and continue. All right. All right, so if everyone's clear on that, let me switch gears here a little bit, and let me switch to a 1-minute chart. On the Atlas line, on a 1-minute chart, there's longs beginning to appear, and these long opportunities that you're seeing here, again, based off of price action, is an indication that first we're above the Atlas line. By the way, those of you who are unfamiliar with the software, the Atlas line is a proprietary method of trading with software, and it focuses more on price action. The Atlas line is right here, and then there's rules. We have pullback and strength trades, and if you look at the back end here of the Atlas line, over here you have the option for the main signals, which is this right here. You have the signals for bounce and pullback and strength trade and some filters. If you want to learn more about trading, visit DayTradeToWin.com. Subscribe to the DayTradeToWin YouTube channel, the next mentorship class where we cover all of these methods with lifetime licenses for the software.